Hello everyone, how's it going? In this video, we're going to talk about Mullen, trading under the symbol MULN. This is a very exciting title to cover, with high volatilities providing opportunities and many ongoing projects that might fuel the speculations. At the same time, few people want to invest in the company in the long term. So in today's video, we will go through the latest fundamentals, the price actions, and my analysis as well as my recommendation, helping you make the best decision possible. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description section, as every help is greatly appreciated. So, over the past few days, despite significant headwinds that Mullen Automotive is facing, there seems to be a very favorable reaction from the market to the recent announcement of their annual meeting of shareholders and the proposals that they're offering. Now, I think that this positive response from the market, and surprisingly so, if I may add, could potentially pave the way for the stock to regain some of its former losses and signify the beginning of a more sustainable recovery in the upcoming few weeks. With the meeting approaching on August 3rd, shareholders have the opportunity to voice their opinions and cast their votes on 11 proposals put forward. Now, they cover a range of matters, including the election of directors, increasing the authorized common stock amount, the potential changes to the company's state of incorporation, and so on. So some of these may carry a degree of controversy, or they may not please everyone. It's very important to remember that Mullen is currently, in my opinion at least, fighting for its survival. And many of these proposals, simply put, allows them to either increase the number of shares emitted without really going through proposals. In other words, going through either like equity offerings or reverse stock splits without going to the shareholders. So that's number one. And number two, they may protect Mullen against any sort of takeover attempts. So these are what seems to me the important parts. And of course, we have to remember that Mullen is a speculative position at the moment. So this positive sentiment could indicate some growing confidence in Mullen's future prospects. It's very thin. In my opinion, they may not even be positive news announcements. However, maybe the shareholders are so lacking in terms of like real meat, so they're going to the bone. That's my feeling, at least. So, I think that the ability to elect experienced directors, the expansion of authorized stocks, exploration of which state they want to go to. Right now, they're saying Maryland instead of Delaware. I think that the market's response so far has been positive. And I think that it's possible that the stock may experience a recovery, gradually reclaiming some of its previous losses, and this can justify a more sustainable upward trend and instill confidence amongst investors. Now, let's also take a look at the technicals of the stock. The trading volume of Mullen has recently been around 593 million shares versus an average volume of 445 million shares. Over the past 52 weeks, the price fluctuated between 10 cents and $35. The volume of shares traded tells us how many shares are being bought and sold at any point in time, and if there's enough liquidity to support a trading strategy. If the float is thin, it could be easy to influence the stock price, but also difficult to exit. When we compare the current stock volume against the average volume, there might be a possibility for a reversal or breakthrough. Right now, we're probably in the breakthrough phase, although this phase could be very shy given the fundamental difficulties that Mullen may be having. The market cap of Mullen is around $33 million versus an enterprise value of $17.3 million. As we compare the current price to the historical price fluctuations, the stock is 95% higher than the 1-month low. See, this is what I mean by the attractiveness of Mullen. This is what makes it interesting, because even with such a small bounce, we make 95% if we got in at 10 cents, right? So it's 95% higher than the 3-month low and 95% higher than the 52 weeks low. On the options market, which often gives us a hint on the market sentiment about where the stock price can go next, the implied volatility is 471% versus a historical volatility of 281%. Put-call volume ratio is currently around 0.06. This means that most people believe, at least in the options market, believe that Mullen will go higher before it gets lower. And right now, I think that the most recent volume of options traded is 60,000 contracts a day versus 51,000 for the 30-day average. Regarding the open interest, the most recent volume of open interest is 1.1 million contracts versus the 30-day average of 1 million contracts. As for the shareholder structure, institutional shareholders own 147% of the total float, which is probably a result of additional lending for short selling. Now, the biggest shareholders would include Vanguard, BlackRock, and iShares. The current short interest is around 17% of the float, which is slightly higher than my personal threshold of around 15% of the total volume being shorted, because above this threshold, there could be a case regarding concerted short operations going on, and also a potential naked shorting from institutional sellers. This is also what Mullen recently talked about, which I think triggered this current phase of events. They have recovered from 10 cents to 19 cents. There are the announcements, but there's also the fact that David Mitchery decided to go after the people who are shorting Mullen. Mullen Automotive is a publicly traded company operating in the EV sector, listed on a NASDAQ. The company designs, manufactures, and sells a range of vehicles, including cars, buses, and trucks. One of the key factors why Mullen is set apart from other EV companies is its focus on long-range electric vehicles. M150, a long-range electric truck, can travel up to 500 miles in a single charge, significantly longer than the range of most other electric vehicles currently on the market, which makes it an attractive company to sometimes invest into. Another key differentiator for Mullen is the focus on developing heavy-duty electric vehicles. The company's product line includes electric buses and trucks, which are designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. The company invests in battery technology as well. They have a proprietary battery management system, supposedly allowing vehicles to have a longer range and faster charging time. Then again, I understand that everybody says that. We would have to see whether time proves that this technology is valid and significant for its share price. This technology can be a key selling point for the company because it allows the vehicles to be more attractive to potential clients. Regarding the financial performance, the company has been having a hard time generating income since they don't have any significant revenue streams before the distribution contract in Europe for iGo vehicles. Those vehicles should generate some income and to be reflected in the 2023 financial reports. In terms of long-term price actions, despite the recent upward momentums, the company has been having, I would say, a relatively bearish trend over the past 5 years, trading between $5 to $10 for a long period of time before peaking around $15 and finally falling to below $1. What this tells us is that Mullen has been hard hit by the ongoing market trends and that its fundamental weaknesses don't help. This assessment has recently begun to change, but in my opinion, hasn't reached a convincing turning point yet. And that right now, this still explains why Mullen is a stock that I would recommend to trade more than to invest in, regardless of the recent good news or whatever they have. The interest surrounding Mullen is mainly the expectation to scalp a quick gain in a matter of days or weeks, either from the short squeeze or from some significant fundamental announcements, not necessarily waiting for dividends from the car sales. With that being said, I also want to add that things can always change rapidly in the sector, so we shouldn't rule this out either. The online communities have been initially skeptical towards Mullen regarding its capacity to survive beyond the medium term, and if there is no more EV hype to fuel the stock price and to provide liquidity. The general mood has since then transformed into a high speaker of whatever the company announces and enhancing it, with sometimes a pinch of optimism in the air, like asking themselves whether Mullen is the next Tesla or if Mitri is the next Musk. Some also express their worries about the company's lack of transparency, and in my opinion, this is a key weakness of Mullen. They don't like saying much about their suppliers, partners, and clients. Sometimes it's because they're less than clean. Other times, it might be because they're not used of giving full transparency. Recently, multiple announcements that the CEO gave to the investors rekindled some optimism, but I believe that more needs to be done in order for this to become an actual tendency. Basically, as far as their online footprint is concerned, the biggest factor to consider is whether the price action gives people enough motivation to have a position in Mullen. The other factors have sometimes served as a pretext to buy its shares, but more often than not, the price action has already sent a signal to the market which reacts accordingly. On top of that, the macroeconomic trends within the sector have been under huge pressure due to the reasons like interest rates, capital flight, conflicts around the world, supply chain issues, and a general decrease in demand in the years to come, which is likely to occur in key markets. Another factor to look at is how the flagship company is doing. In other words, Tesla. The EV sector is a relatively new industry with much of it still in development. Very often, people determine whether they should purchase EV stocks based on whether Tesla is performing strongly. The idea is to profit from a sector-wide gravy train conducted by Tesla, pulling all the other ones behind it. We have seen on multiple occasions how the share price of companies like NIO, Lucid, or Mullen following a very similar trend to Tesla. Of course, it doesn't always follow the same trends as the other ones. This can play in its favors or the other way around. With that being said, let's also take a look at Mullen's financials, which can give us some hint about what we should do about this company. The cash balance has been decreasing over time. This is not a new issue, but it's definitely a worrisome one. Because the reason why cash balance is relevant is that it is used not only to finance the operations, but also to meet short-term obligations. If Mullen cannot meet those obligations, the company would be liquidated, with the possibility that none of our investments would be reimbursed whatsoever. The liabilities of Mullen tells us that they are trying to control things. They're trying to show that, they're responsible, they're good stewards of our money. But honestly, I don't think that fundamentals are that important for Mullen in the current stage to begin with. The other thing is, as far as the retail traders are concerned, the financial books is not the first place they would begin to examine companies. The last element to look is the profitability. So we should expect to see something coming out of the IGO distribution contracts when they issue Q4 of 2022 and Q1 of 2023. On the other hand, I do believe that Mullen needs to demonstrate to investors that they can sell their own cars. If that's not the case, it's only a matter of time before time runs out. Overall, the financials of Mullen shows us that the company wants to stay afloat. It is willing and sometimes capable of controlling its costs. But what we need to see is the company's capacity to increase its operational revenue. And hopefully, we can see that with the IGO distributions. So, regarding the short squeeze potentials, this is a major catalyst for the company. The reason why it is relevant is because the short positions will tell us about what a significant portion of the market thinks about Mullen, and also whether there will be potentials for a squeeze. Currently, there are around 42.5 million shares been shorted against Mullen. The vast majority of them traded outside of public exchanges, therefore by institutional traders. The potentials for a short squeeze is therefore significant. The short squeeze is a phenomenon observed when traders decide to collectively back up the price of a stock, forcing those holding the short positions to redeem. It's important to note that the short interest is not a guarantee of a short squeeze, but still a metric monitoring by the investors. The redemption acts as a purchase in the open market, which will push the stock price to higher levels. And personally, I think it's worth considering that the short sellers may have valid reasons for their bearish sentiment. There obviously is. Mullen is not one of those well-managed companies or with a very clean history. With that being said, I do believe that this can be one of the key reasons why people want to buy Mullen, including ourselves. So my recommendation for Mullen is to either stand on the side because the volatility risk remains very high, or to start buying for the short-term speculation if the risk appetite matches with the profile of Mullen, which is a short-term speculative position for the time being. And I would recommend to commit between 0.5 to 1% of your portfolio in that position. And I would also like to recommend to split the allocation in batches of 20% at a time over the next 3 to 6 months in order to benefit from retracements. Also remember, there's still a very significant solvency risk or bankruptcy risk with Mullen, so going in, we have to be fine with this kind of risk.